Nari McDiarmid with you ahead of MiningNews Select in Perth, and I'd like to welcome back Paul Berend, Chief Executive and Managing Director with Iron Bear Resources. And Paul, firstly, for anyone unfamiliar, can you provide a quick outline of Iron Bear, the company?
Sure. So Iron Bear is a listed ASX junior. You have a market cap of around $50 million at the moment. Our flagship project is a project Iron Bear that we'll be discussing today, I hope. And we have a couple of other, let's say, non-core assets, including some gold assets in New Zealand, which have some intrinsic value that we're looking to crystallize. But our focus is clearly Iron Bear.
Well, let's take a closer look at Iron Bear, the project. What are the standout features of this asset in Canada?
So the Iron Bear project is a large iron ore project in Canada. It's a magnetite project. It's located in the Labrador Trough. There are other iron ore producers there, including IOC, ArcelorMittal, and Champion Iron, all using joint or similar infrastructure. The key characteristics of the project is very large. In other words, it's a huge mineral deposit. You know, the life of mine is well beyond 50 years. It's also a project which has access to infrastructure. So we're 35 k's away from a heavy haul rail open access, which is connected to an iron ore export port, which is used by various iron ore producers, which I mentioned. IOC uses it, Champion Iron uses the same infrastructure, Tata uses the same infrastructure. And of course, infrastructure is the name of the game when you talk about iron ore. We also have, and this is very exciting, access to a lot of cheap renewable hydropower. And for magnetite projects, that has a huge impact on your cost base. And also it ensures unbeatable green credentials in terms of your carbon footprint and pollution in general. And the key reason, I suppose, that we're unique, because you might argue that's not unique, is the fact that we can produce direct reduction quality pellets. We built a pilot plant. We produced this very unique iron ore product with bulk samples mid last year. And these DR pellets not only unlock substantial, actually halving the carbon footprint across the steel value chain by essentially enabling the direct reduction route, which is based on natural gas, but they also command very high premiums compared to conventional iron ore. We're talking 50% high premiums for, $15 a ton of additional conversion costs. And so we're one of the very few companies which can produce these pellets, true direct reduction pellets. And that is the reason, and this probably for investors, the main reason they might be interested in us. That is the reason that Vale signed with us a development agreement in February 2025, which essentially provides us with funding all the way to decision to mine. So Vale is going to provide us in two tranches, $138 million US, which is substantial, and all the technical and operational support required for a project like that, as well as the balance sheet, because these types of projects are very capital intensive. And so you don't have to believe what I say, but Vale obviously agrees with at least some of what I'm saying. So that's, I think, the Iron Bear project. Those are the key highlights. We're fully funded. That means limited or no dilution for shareholders linked to the project itself. An extraordinary asset in terms of its size, an extraordinary asset in terms of its asset to infrastructure, and an extraordinary asset in terms of the type of product that we can produce in a world where high-grade iron ore is depleting rapidly, right? So keep in mind that the direct reduction pellet market is anticipated by most analysts to increase by 50% over the next decade, and that's the lower end of expectations.
Well, Paul, finally, what's your focus at Iron Bear as we approach mid-year?
Well, it's pretty much driven by the development agreement that we have with Vale. So I mentioned that it's in two phases. The first phase of the development agreement is actually a de-risking phase. And so de-risking means confirming access to power, rail. There's been studies and announcements around these things, and other dimensions, including environmental, First Nations. And all of this then flows into a pre-feasibility study. That is, a linchpin for us because that's when we sort of become real. Once the pre-feasibility study is out, and assuming that it delivers what we hope it will deliver, at that point in time, we will complete our 2026 drilling program. And once those two things are completed, Vale will have the discretionary right to go to phase two. I'm pretty optimistic around what the outcomes of those two activities will be. And so we should see us transitioning to phase two, which obviously would be huge. And once you're in phase two is really the bankable feasibility study, the approvals process, the setting up IBAs, so economic agreements with First Nations. That part becomes, let's say, less risky, right? And again, I do want to encourage investors to think about the risks of a project like ours. They're real. The upside is very real. It's a trade-off, but that balance starts shifting towards more upside and less risk.
Paul, plenty of news flow ahead. Thank you. And I look forward to seeing you at Mining News Select in Perth.
Thank you very much. It was a good talk.